I'm here with Elias Davis, former Google employee, now venture capitalist, and so many other things. Elias, how's it going?
Really nice. Thank you for having me, James.
Why'd you leave Google? Google seems like like heaven in terms of workplaces to work at.
A lot of every single person that I tell that I worked at Google literally asks me the same exact question. Look, I
I'm
think
completely
it's
unoriginal then.
no. I mean, it's a common question. I mean, it makes sense, right? A lot of people's dream job is to go work at Google, get 3 massages a day, and eat free snacks all day.
Mhm.
My response to that is, look, it was an incredible place to start my career. After college, gained a ton of experience that I can talk about. But I think for me, it was Google at this point has 100,000 plus employees. If I ever wanted to become CEO, I'd have to be there basically my entire career and probably more than that. Um, and I kind of felt limited. I mean, I didn't feel as if there was like the need for innovation, even
Well,
though that sounds a little crazy.
no,
Uh,
no, it makes sense because whenever I see, there's a variety of books written by ex-employees of Google, and I always read the book, and I always am asking myself, well, what did this guy actually do at Google? Because it's a machine that runs itself. I mean, most of the revenues come from one source of revenues, the AdSense, AdWords,
yep,
and you know, it doesn't really need marketing. You don't need to make a TV commercial for Google. People are just always using it.
right.
And I'm unless you're like kind of like just doing the basic workings and tweaking the algorithm or tweaking Android or doing biz dev with phone companies. I always wonder what people do. Like what did you do at Google?
It was kind of an interesting role. It was a middleman between software engineering, product, and sales. So part of my responsibilities was working directly with engineering on everything from idea, origination of new products for AdSense and DoubleClick on the ad tech side.
What's an example of a new product that AdSense would have?
So on the sell side of the advertisement business, which is what side I was on, let's just arbitrarily say a bottom ad that sticks to the bottom of your page when you scroll on Nike.com.
Okay.
Actually, that's one of the products that I helped launch.
Okay, so, like, if I go to Nike, Google AdSense places the ads, and now if I scroll on Nike, it's set up in such a way that the ad still is viewable. I can't scroll past the ad.
Correct.
Okay,
Yeah.
alright, that's a good so you left and you started a venture capital firm. How did you find or, sorry, you joined a venture
Yeah.
capital firm. How did you find this firm?
So it's funny. So I actually left Google and joined two different startups in between. One called Kimi, which has raised a lot of money. So they are in the key duplication kiosk space. So if you're familiar with like Redbox, which is like the new blockbuster, they created a yellow box instead of a red box where you go, show up, put in your key, and it duplicates it. So I was
Where
there.
do I find those? I've never seen one.
7-Eleven, Bed Bath and Beyond, they're all over.
So if I go to a 7-Eleven, I see a yellow box, I could put my key in.
Well, yeah. So you put your key in. It basically uses AI and robotics to identify what key it is, and it can print one immediately out of the machine.
Oh, that's great.
Yeah.
People I'm curious what is the story behind every single person who uses a yellow box in one day, like all the nefarious purposes they have for these
Yeah.
keys, as opposed to just like, oh, I just need an extra key. And so, okay, you were there, and they're still in business. What's the next startup?
So they're still in business. They actually raised, I believe their last round of funding was debt. Left that business, joined another business called Solido, which builds full stack operating systems for restaurants. So essentially, everything that needs to run at a restaurant, inventory, day to day operations, back house, front house, you name it, they run it. And that company sold in January of this year.
For how much?
I think close to 25 million, I would say.
Okay, did they how many restaurant customers did they have?
Not many. I mean, I
So, like,
what
for instance, if I was a restaurant owner, they would keep track of like, okay, here's how much alcohol you have. Like, would it like when someone makes an order, does it go into does the order like a customer makes an order? Oh, I'm gonna have like 2 bottles of wine and a hamburger and all this. Does it go into your system, keep track of the inventory so you know when to order again?
so it wasn't there yet. That was a step in the process where it's supposed to get there. The strategy that they took was they went down, right? They were a SaaS business. And their strategy was let's tackle the 1% of restaurants to build out a brand and be able to put a name behind our company, and then we'll try out larger SaaS strategy of tackling restaurants like Chipotle that have I don't know, 60,000 locations, etc. And before that actually happened, I mean, they sold earlier this
But
year.
what's a problem they solved for the restaurant?
So, I mean, look, there obviously are many competitors in the space, like Micros and
Mhm,
Toast, and have raised a ton of money.
mhm.
Um, their competitive advantage was their system. I mean, their system uh, is utilized by some of the biggest and best restaurants. 11 Madison Park in New York uses them. Italy does as well.
So, again, like, what do they use them for? Like, what's a
So they're I mean, point of sale.
mhm.
That's their primary use today. We're building out other I mean, I was the lead PM on inventory, and we were in the process of building that out when the company sold.
So point of sale, again, so that means somebody orders something and then it goes back into the inventory system. It does it what is it?
Well, so I mean, a lot of that theoretically would be dynamic. Right now it's all manual. But yeah, the goal was that essentially it's an iPad. The employees that work for the restaurant can leverage that for placing orders, payment, so payment processing as well. And then eventually the plan was to dynamically integrate that with inventory as well as other things.
So right now the main thing they do is just simply take the order, pay for it,
Correct.
and that's it.
Correct.
That software was isn't all over the place already?
It is, but I mean, let's think about the different types of players in the space, right? Like, I mean, I'm not the
Like if I'm a restaurant, can't I just use Square for that?
You could, but the pricing is different,
Mhm,
right? Like, that might be just a much more expensive option in the suite of different competitors in the space.
mhm.
Yeah.
Uh, what do you think of this idea? I'm gonna pitch you an idea real quickly, then I wanna talk about venture capital.
Okay.
So, somebody makes an order like, "Hey, I like a reservation for 2 at your restaurant," and then the system, integrated with the system like you just described, Googles the customer and figures out well, A, determines has this person eaten at the restaurant before? What did they order? What do they like? Who were they with? What did they like? But Google's the person, maybe figures out other things that you can use then in the restaurant when they arrive to modify the restaurant experience so they have a better time.
100%. So I'll tell you the vision of this company, which obviously they didn't get to because they sold it. But the vision here was, let's so right today you go on the internet and your entire experience on the internet could be monetized using ads, right? Like, you go on this site, you scroll, you could get ads in the placement within the content, on the sides, on the bottom. You switch pages, you could get a pop-up ad. There's many ways that you can basically monetize content today. Now let's think about the restaurant experience. You're walking into a restaurant, you're probably either you have a reservation and you wait 5 to 10 minutes to sit down, or you're just sitting around waiting for a table to free up. You're then sitting down, the waiter comes up, asks you what do you want to order, and then you basically are waiting, let's say, half an hour until your food arrives. So yes, you, I guess, could be having a conversation with the person in front of you, but why can't your experience be based on either what you've ordered in the past, what they know you want to order, or even potentially, like, imagine you walk into 11 Madison Park and Grey Goose wants to upsell and market their product to X different types of customers that are going to eat at 11 Madison Park. They can basically, I mean, upsell the people eating there using 11 Madison Park by charging them, giving them specials or giving them different types to try. Or I don't know, there's definitely ways to upsell clients based on their previous purchase history, what you know, what you think they want, pairing with food, even ads. I mean, at the end of the day, actually a company that we are looking at. We didn't end up investing and we passed on it, but it's called eMenu, right? Which is like essentially just a menu on an iPad, but
Oh,
it's a
I love this.
perfect
That's a great idea.
but it's I mean, look, the business is doing pretty well, but the idea is, like, old school restaurant businesses have these antiquated menus that essentially need to be changed every once in a while because either they look old, they're destroyed because of people usage, they're not dynamic in pricing, seasonality, different choice in menus. And at the end of the day, what if you can just monetize that experience and put ads on it? And then there's an opportunity for that, and that's what
Why'd you
that.
pass on that business?
Um, I mean, one, it's pretty early on. Two, the team didn't blow us away.
Mhm.
And look, there's always opportunities. We have more than enough deal flow. Yeah.
So, okay, but that's very interesting. So or some of the negatives here. It was early on. Team, not that they maybe not maybe the team was too young or too not seasoned enough, so
Right.
team wasn't right. But you
It's
still have
hard
to
to scale.
it's hard to scale because at least initially you have to call every restaurant.
Right.
Eventually, the restaurants will know about it and they'll just download the software. Um, but
Yeah, I mean, there's a hardware piece to it as well, right?
yeah, because I guess you have to give iPads,
Exactly.
or the restaurant has to already have iPads. It's just an app on iPads, but they have to keep track. No one steals iPads, stuff like
Exactly.
that.
Yep.
You could provide it. It
Th
could be
this
an insurance
company this
component.
this company in particular provides the iPads,
Mhm.
but it's a large expense. I mean, capital expenditure for this business, they need to raise a lot of capital to build out their business, and it's hard to scale, which is one of the things that we identified.
Wonder if you need to use an iPad or if you can create a tablet that's just for this purpose, like a really low energy usage, low operating system tablet that is made just for this purpose.
100%.
Mhm.
But let's also think about like quality and pixelation and the quality of the images. And what if right today it's just a menu on an iPad, but tomorrow it could be dynamic pricing with integration of
Yeah.
AI or 3D visualization of the food or drinks that you want to order.
Hmm.
Or I mean, there's a list of things that they could be working on.
So okay, so what do you look for as a VC? Like, what are some of the things you've invested in that impressed you, and like why do they impress you?
It's a great
Like,
question.
do you guys have like a checklist of
So
things?
yeah, so we do. So actually, we have a very structured process of evaluating deals and opportunities as they come in through the pipeline. So initially, we meet a founder. It's usually, I mean, it comes everything from cold email to direct to my email through referrals of other co-investors that we've invested in with, or founders of companies we've invested in that friends are starting companies. So we've seen deals from basically every avenue. And then we've put together a rubric. So like team, IP, product, market size. I'm trying to think what else. But we've basically put in together a scorecard when evaluating companies and limiting our deal flow.
So, are you looking for early stage, like
Yeah. So
because you haven't mentioned revenues and
yeah.
uh,
So we're a pre-seed, seed, and convertible note to Series A type venture
do you like
fund.
that structure? Like, so basically, describe that structure as you put money in, but you don't know at what level you're investing until they finish the next round.
Look, so it's a great question. A lot of the companies that we normally come in on convertible notes, I'll give you an example. We actually invested in the convertible note for FitSpot before their current raise right now.
Okay.
Um, and I mean, obviously, we actually invested in FitSpot even before that convertible note. That was our second time putting money into the company. Um, but it's the perfect
So
opportunity.
you were already in at a very low valuation, and then this is kind of like a bridge round to bridge them to their next round.
Correct. I mean, they had cash, so it wasn't necessarily about that, but it was putting more money in on a discount to what we already knew they could raise a little further down the line.
Okay.
So yeah, I mean, for us, it's the perfect opportunity to come in to get a 15 to 20% discount on, a pricing round that will probably happen in the next 4 to 6 months, anyways.
And they've already had some success, so you know that they're gonna kind of keep moving. They're over the hump in terms of initial people know who they are, and
Well, yeah. So certain companies, right? Like FitSpot is an operating business, right? They
Mhm.
have revenues, they have a large team, they are growing nicely. But we've done convertible notes for companies that are basically an idea on a napkin with two guys. Um,
okay, so what do you look for in the team?
it's a great question. I mean, there's a whole list of things like uh potentially previous experience, having worked together if it's a team of more than just one. Um Educational background's important, experience in the industry they're trying to go into is important. Potential previous entrepreneurial experience, whether they were founders of companies with an exit or not, as well as being an operator and executing on whatever project or plan they had. um, and look, at the end of the day, a lot of the qualities that we see in founders are individuals that we think will survive through ups and downs in business through entrepreneurship, right? Because at the end of the day, I'm sure you know this better than I do. Like, not every process of starting a company is linear and nice and beautiful, right? There's going to be ups and downs on days that you don't know what happened and why this deal fell through and how you're going to meet payroll in 2 weeks. And those are, those are things that a founder that we invest in will have to go through. And so we try and qualify and quantify that before we invest.
So, okay, that's on the team.
Yeah.
Um, I also sometimes you could kinda sense if the usually it's like 2 partners starting a company. You can sometimes sense if the 2 partners are getting along, and, I think they have to get along really well, for the business to work, or else there's gonna be some problem down the road. I think that's a critical thing.
100%. I mean, we've seen it's funny you mentioned that. I mean, this investment was way before I joined the fund. And probably best not to mention the name of the company, but
Theranos?
no, no,
No,
thank
just
God.
kidding.
But we did invest in a company pretty early on that was a husband and wife, and they ended up getting into a huge argument, and uh basically both don't work at the company. I think one actually does, or maybe they share a board seat between the both of them, but we replaced them as founder or as CEOs. And I mean, things are going great now, but it definitely a challenge to get over.
Right, like, that's the kinda work that's just not fun.
Definitely not. No,
You
you're
know,
right.
you want I mean, I'm an angel investor now. I invest in a lot of private companies, but previously I had been a venture capitalist, meaning like you, I worked at a venture capital firm. Companies would make appointments to come and see us, and we had an obligation to put other investors' money to work. It's very different than an angel investor. And I really did not enjoy being a venture capitalist. I thought I would like it, but I found you have to be kind of extroverted. You have to be able to go to industry conferences, talk to lots of people, make sure you're whining and dining so you get the right deal flow. And as an angel investor, it's different. I can just invest with my friends who are VCs who are doing that. And I'll just, hey, can you carve out a small piece for me? And then I get in the deals. But being a VC, I didn't have the social skills to do it.
So look, I think it's funny you mentioned that because I basically spent probably 3 or 4 years trying to get into venture from the time I got into Google till when I actually got into venture. And during that time, right, like you could go sit down with a VC or cold email a VC and say, "Look, I want a job. Why are you hiring for an associate or an analyst or whatever it is?" And what I really figured out, which is what's allowed me to be successful today, is look over the last 3 or 4 years, I've basically built that network out. I mean, I am probably friends with almost every associate to principal to even partner at the majority of venture funds on the East Coast and West Coast. And I've been able to leverage those relationships now to find good deals. I mean, to be honest, I don't even go to many VC events. I don't really find the need. We have enough deal flow coming in through either individuals that we've co-invested with or founders we've invested it with that have friends that are starting companies, and we leverage all of that to find deals to invest in. So,
And maybe walk us through what's the last deal you invested in that you're excited about?
trying to think the exact last deal that we've done. Um, I mean, Backtracks was pretty recent.
So
Um,
Backtracks, they do kind of analytics and other special services for
They
podcasts.
do hosting and analytics for podcasts today. They have a pretty big vision for the company that I'm not sure if they want exposed just yet, but
Okay.
they're doing pretty incredible things there. Yeah.
And what else did you like about them that you can see? Because it's a very competitive space.
Yep.
There's a lot of companies out there doing analytics for podcasts and ad insertion and so on. What did you like about them?
Look, I think what came down for Backtracks is one, we obviously tested the technology, so the technology is definitely there. But we love Jonathan. I mean, Jonathan, throughout the entire process that we spoke to him. We did reference checks. We spoke to the other investors in the round, and he's absolutely unbelievable. He's a guy. He's the perfect example of the individual that we want to invest in, not only because of his previous operational experience in developing technology for audio analytics, but he is a type of individual that will probably make it through the peaks and troughs of being an entrepreneur. I mean, I don't know if you know a good example is if you hire someone and you put them on a very strict plan and they don't execute to it, a founder potentially might not want to fire him immediately, right? Especially if it's a very small team. And I think it's important that, Jonathan makes decisions very quickly, and very thoughtfully, which I think is the more important thing. Is he doesn't make rash decisions. He's very thoughtful of every decision he makes. He's very strategic in the way he approaches potential new clients, new customers. They've done an unbelievable job in attracting great new customers, and they're continuing to grow very nicely. So we're super excited what they're up to.
Well, I'm glad because one of the podcast projects I'm working on is gonna be a customer there,
Yeah.
so I'm glad you brought them up. What's a company you invested in that it didn't work out? Like, you invested and then just one thing led to another and it failed.
Look, luckily enough today, we haven't had any companies in our portfolio that are no longer existing. So that's a super exciting thing. But at a pretty high level, I mean, look, at the end of the day, so we were an early stage investor in Hippo, which raised $100 million at $1 billion valuation last week. And we have companies that we put money in also 4 years ago or 3 years ago, and are not at $1 billion valuation.
What does Hippo do?
So they're in the home insurance space.
Hmm.
So they're large. Their competitor is Lemonade. Um, but going back to the successes and failures of the companies in our portfolio, there are many I mean, every company. I can't speak to Hippo because Hippo's an investment that was made a long time ago. But even the 8 or 9 months that have been with the fund, there's been many companies in our portfolio that have gone up and down and up and down. And I can give you a story. I mean, a company that I specifically worked pretty closely with when I joined the fund. I mean, let's just say they basically didn't have cash to make payroll, and today they're raising a lot of money very successfully at a much higher valuation than we thought, and they're doing phenomenally. I mean, their financials do incredibly are looking great. And
I feel like the difference between now and, like, 1999 or 2000 or even the difference between now and, like, 2006 is that, yes, there are some, like, overinflated companies that might be raising money too high. That's always going to happen, and there's companies that are probably undervalued. But it seems like in general, value exists. Like, companies are real now. So if you're making restaurant software, you're selling to restaurants and you're making revenues, and then you could raise another round, like a Series B or Series C, like the second, third, or fourth rounds.
right.
And I feel like it's much more legit now. It's not just like the fastest path to an IPO, so everyone can exit.
Yeah, yes and no. So
Mhm.
so I agree with you 100%. There's some legitimacy in the capital being raised for sustainable businesses. But let's just say, right, like it's been close to 10 years since probably a little over 10 years since the last recession.
Mhm.
And there's many companies in the last, let's say 12 months that have gone public on the stock exchange. Um, and many are still burning a ton of cash, and they've raised a ton of cash, and they are not performing great on the public market. Do you think that they're gonna make it through a recession? Um,
Yeah, it's a good question. I think some of them have raised so much money that the answer could be yes. But yeah, you're right. It's more. I mean, for a long time there weren't companies going public. The standard exit was a company would sell itself to another company, like a Google.
yeah,
And it's only in the past year I think we've started to see companies going public. But they're not smaller companies. They're like huge companies. Like Uber goes public at 100 billion or $80 billion valuation, and that's enormous to go public at that level, to raise money from the public at that level. You're not really seeing, like, bad small companies go public like we used to. I think when we see that, then it's more of a warning sign to me.
I mean, look, I wasn't old enough to really understand the spike in valuation in 1999. But I think I mean, look, it's interesting. Like, for example, WeWork has raised a ton of cash, right? And they're burning a ton of cash, and they're talking about going public. And the question is whether, let's just say a recession comes, right? And real estate goes down the drain. What's going to happen? And I think I mean, it's kind of scary
Yeah, no,
that,
I agree with that. I think some of these big companies could have overinflated valuations. But at the same time, the internet and the web and social media is at a point where everyone in the world's using it. So it's not like 1999 where every single company was speculative just because only a tiny percentage of everybody knew about the internet, but only a tiny percentage of the population was using the internet. It's kind of like, I'm not saying Bitcoin is this or that. I'll reserve that for another podcast. But it's kind of like where Bitcoin is. Everyone sort of has heard the word Bitcoin,
Right,
but probably a very small percentage of the population owns a Bitcoin.
right.
So it could be similar kind of comparison where the next generation of this, suddenly people say, "Oh, this is a legit currency," and blah blah blah.
Right, and then the other thing I would say is there I mean, obviously, autonomous driving as a good example has become a thing in the last, what, 5 to 10 years maybe?
Yeah,
And now that whatever, Tesla has been public for quite some time, but now Uber and Lyft on the public market, let's just say one of these Uber cars runs someone over and kills them, a lawsuit comes in, they're sued, it's a disaster. Do we think that, the stock price is gonna drop dramatically? I don't know.
yeah. I
And
don't
and I
know.
and
I
I
think
think I think that's something to think about because there's not regulation that regulates that today, right? We really don't understand a lot of how artificial intelligence and autonomous driving is going to be treated, and putting that on the public market is scary. I mean,
Yeah. All right. So that's a good point. Now you've obviously seen people go from working really hard, you know, building their companies, selling them, getting fabulously rich. So this is just a naive question. When someone suddenly makes $100 million, what do you think is the first thing they do?
um,
Like how do the billionaires or the sudden billionaires live differently than the rest of us?
that's a really good question. I'm trying to think of the billionaires that I know that have sold their companies in the last 5 to 10 years. Um, you know what? A lot of the people that I know that we've co-invested with, angel investors that have sold businesses for billions of dollars in the last couple of years, honestly, have not really changed their lifestyle. I mean, they're either still at the company that they're working at, investing their shares, like on Silicon Valley, or they're making angel investments, and trying to find good opportunities to even make more money, or I don't even know. I mean, I don't think they're like flying on private jets, sitting in the south of France, not doing much. But I don't
Do you know anyone who's just totally retired at like the age of 28 after selling a business?
know. No,
All
no,
right, that's good. It's a good sign for humanity.
yeah.
So, what's your next step? It seems like you're building the networks, you're building your social networks out, you're finding the deal flow. You could potentially at some point start a VC fund.
So that's a great question. I mean, I'm usually asked like, so why are you in VC and not an operator, and what's your 5 to 10 year plan? And I think, uh, obviously things can change. There's a couple things I could do. One is I could just stay where I'm at because things are going great and I love what I do. Um, Two, I can start my own venture fund with some of the other associates and principals that are at the other funds. Three, I could probably go start a company and be the CEO of my own business, and go raise capital, leveraging my network, and try and do that. I'm trying to think what else. I mean, those are the top couple things, and I think I do have an entrepreneurial bug, so at some point, I would love to eventually go back to being an operator and start a company. Um, and kind of that's what I'm doing now. I'm literally spending all of my time working with early founders, gaining entrepreneurial experience from the sidelines, helping their businesses grow, and growing my network with respect to meeting individuals that have either been former successful operators that have sold their businesses for billions of dollars, but also building my network for access to capital. So one day when
Right.
I need to go raise capital, I can call the individuals that, I work closely with that are angel investors and then go that route. So
Well, thank you for this total rundown on venture capital and so many interesting things to that we've covered. And good luck on
thank you
keep
so
it
much.
keep in touch. So when I'm pitching my next idea, I'll have someone to pitch it to. So
Pleasure. Thanks, James. Appreciate
thank
it.
you.